What if I told you there's a single company that has more financial power than most nations? A company that advises central banks, manages the retirement funds of over 100 million people, and wields a supercomputer AI so powerful, it's been called the central nervous system of the global financial system. This isn't science fiction. This is BlackRock. With more than $10 trillion in assets under management, a figure larger than the entire economy of every country on Earth except for the United States and China, BlackRock isn't just a player on the world stage. In many ways, it builds the stage. This is the story of how a disgraced trader and 7 partners turned a revolutionary idea about risk into the most dominant financial force of the 21st century. It's a case file on how to turn crisis into opportunity and how to build an empire in the shadows. Our story begins with failure. In 1986, Larry Fink was a hotshot trader at First Boston until he wasn't. His department was publicly humiliated after losing $100 million on a bad bet on interest rates. For Fink, the sting of that loss became an obsession. He realized the fundamental flaw in Wall Street's thinking. The entire industry was built on gut instincts and star traders, but no one truly understood the complex risks buried deep within their investments. His vision was to flip the model entirely. He wanted to build a firm where data, not bravado, was king. In 1988, Fink and 7 partners founded BlackRock under the umbrella of private equity giant the Blackstone Group. Their pitch was unique. They weren't just going to manage money, they were going to be financial surgeons, using sophisticated computer models to dissect and understand risk for their institutional clients. This obsessive focus on risk management became their core identity. While the rest of Wall Street chased explosive returns, BlackRock built a reputation for being the smartest, most cautious firm in the room. They were the ones who saw what others missed. After a split from Blackstone in 1994, BlackRock was truly on its own. Fink's vision of a data-driven, risk-averse behemoth was now free to grow, and it laid the foundation for an empire that would soon benefit from the world's biggest financial catastrophe. By the mid-2000s, BlackRock was a major force, managing over $1 trillion. The company was at its peak in terms of reputation and influence. But its most valuable asset wasn't its portfolio, it was a proprietary technology platform they had been building since the beginning. They called it Aladdin. Aladdin, which stands for Asset, Liability, and Debt and Derivative Investment Network, was BlackRock's all-seeing eye. The system could monitor and analyze millions of trades, stress-testing portfolios against thousands of potential economic disasters, from interest rate spikes to geopolitical conflicts. It was the ultimate risk management machine. While the financial world was getting drunk on the booming U.S. housing market, an omen was appearing on Aladdin's screens. The system saw the hidden dangers lurking in complex mortgage-backed securities, the very assets that were fueling record profits for Wall Street's biggest banks. BlackRock saw a house of cards. They understood that the trillions of dollars in derivatives were built on a foundation of bad loans, and that a single gust of wind could bring the whole system down. They quietly advised their clients to reduce their exposure, even as their competitors called them paranoid. The firm was at a strategic crossroads: join the party and reap the short-term rewards, or trust your data and prepare for the inevitable crash. BlackRock chose its data. The financial world was at its absolute peak, but the omen of its downfall was blinking on their terminals. The critical moment came in September 2008. The collapse of Lehman Brothers sent a shockwave through the global economy, triggering a full-blown financial meltdown. The world's biggest banks were insolvent, poisoned by the very mortgage-backed securities Aladdin had warned about. Panic engulfed Washington. The U.S. Treasury and the Federal Reserve were left holding trillions in toxic assets with no way to value or manage them. They needed an expert, someone with the technology and the credibility to handle the biggest financial cleanup in history. There was only one phone call to make. They called Larry Fink. This was BlackRock's stroke of genius. They were hired by the US government to manage the toxic assets from Bear Stearns, AIG, and other failed institutions. Overnight, BlackRock transformed from a private asset manager into a quasi-public utility, the trusted advisor to the most powerful entities on Earth. This government contract gave them unprecedented credibility and an unparalleled look into the guts of the global financial system. While their competitors were going bankrupt, BlackRock was being paid to take inventory of their mistakes. Then, with the world still in ashes, Fink made his killer move. In 2009, BlackRock acquired Barclays Global Investors. The deal gave them one of the fastest-growing product lines in finance, the iShares family of exchange-traded funds, ETFs. The timing was perfect. In the wake of the crisis, investors were fleeing from risky, complex products and flocking to the simple, low-cost diversification that ETFs offered. The 2008 crisis wasn't a setback for BlackRock, it was the single greatest accelerant in its history. It validated their entire philosophy and allowed them to become the undisputed winner of the financial world's darkest hour. The decade following the crisis saw BlackRock's complete and total domination. Its assets under management exploded from just over $1 trillion to the $10 trillion behemoth it is today. This empire was built on two powerful pillars. The first pillar is iShares. The acquisition from Barclays put BlackRock at the epicenter of the passive investing revolution. As trillions of dollars flowed out of actively managed mutual funds and into passive ETFs, BlackRock became the default destination, collecting billions in management fees. The second, and arguably more powerful, pillar is Aladdin. BlackRock made a brilliant strategic decision. They started licensing their crown jewel technology to other institutions. Today, Aladdin is used by hundreds of firms, including many of BlackRock's direct competitors, to manage a combined total of over $21 trillion. Think about that. BlackRock not only manages its own vast fortune, but its proprietary AI also serves as the underlying operating system for a huge chunk of the entire global financial industry. This gives them a godlike view of market flows and a competitive intelligence advantage that is almost insurmountable. This incredible scale has brought incredible scrutiny. Critics label BlackRock a shadow bank, arguing that it is too big to fail and wields the power of a nation-state without any of the democratic accountability. Its vast shareholdings give it immense power over nearly every major publicly traded company, influencing everything from CEO pay to climate change policy. Larry Fink's annual letter to CEOs is now treated as an economic decree, especially his recent push for corporations to adopt environmental, social, and governance, or ESG, criteria. This has made BlackRock a political target, attacked by one side for using its power to push a woke agenda, and by the other for not doing nearly enough to combat climate change. This is the fallout of their domination. When you are the largest shareholder in the world, every decision is political. Every investment is a statement. BlackRock achieved its goal of being at the center of the financial universe, only to find itself at the center of the world's most heated debates. The story of BlackRock is a masterclass in strategy, timing, and the ruthless exploitation of technology. Here are the key lessons from their rise to power. Lesson 1: Monetize your tools. While Wall Street was focused on the product, risky investments, BlackRock focused on building a better tool, the Aladdin platform. They perfected a system for understanding risk, and when the market for risky products imploded, their tool was the only thing left of value. Then, they licensed that tool to everyone, creating an unshakable revenue stream. The most valuable part of your business might not be what you sell, but the system you use to sell it. Lesson 2: A crisis is an unparalleled opportunity. The 2008 financial crisis vaporized BlackRock's competitors. But because BlackRock had spent 2 decades preparing for that exact type of event, they were positioned as the sole savior. They used the chaos to secure government contracts, enhance their reputation, and acquire their biggest growth engine, iShares, at a fire sale price. Never let a good crisis go to waste. Lesson 3: Become the operating system. By licensing Aladdin to its rivals, BlackRock pulled off a strategic masterstroke. It's like if Coca-Cola owned the bottling plants used by Pepsi. They established their technology as the industry standard, creating an incredibly deep competitive moat while also gaining priceless intelligence on how capital is moving across the entire market. Don't just compete in the game, become the game itself. From the ashes of one man's failure, BlackRock built an empire on the bedrock of risk management, waited for the world to prove them right, and then seized the opportunity to become the most powerful financial institution of our time. If this breakdown provided you with value, do us a favor and hit the like button. Make sure you subscribe to Corporate Case Files for more deep dives into the titans of industry. Now, we want to hear your take. Comment below. With its immense power over the global economy, should a company like BlackRock be regulated more heavily, like a public utility? Let's get the discussion started.